The world of investing is a roller coaster of risk, reward, and surprises. While most investors are in search of steady returns, history has shown us that the markets can produce moments that are utterly shocking, some jaw-dropping, others heartbreaking. In this video, we're diving into 5 of the most shocking stories from the world of investing that will leave you amazed and perhaps a little wiser. These aren't fictional tales, they're real events that shaped the financial world. Stick with us to the end because the final story is one of the most dramatic recoveries in financial history. 1. The collapse of Enron, a tale of greed and fraud. Enron was once considered one of the most innovative companies in the United States. Founded in 1985, it grew rapidly to become a Wall Street darling. By the late 1990s, Enron was lauded for its revolutionary approach to the energy market, consistently ranking among Fortune's most admired companies. But behind the scenes, all was not as it seemed. In 2001, Enron filed for bankruptcy in what was then the largest corporate collapse in U.S. history. The company had been cooking its books, using complex accounting loopholes to hide billions of dollars in debt. Enron's executives, including CEO Jeffrey Skilling and Chairman Kenneth Lay, encouraged employees to invest their retirement funds in Enron stock while selling off their own shares before the collapse. The fallout was catastrophic. Investors lost nearly $74 billion. Thousands of employees lost their jobs and pensions, and the scandal led to the dissolution of Arthur Andersen, one of the largest accounting firms in the world. The collapse also ushered in stricter regulations, including the Sarbanes-Oxley Act, to prevent corporate fraud. The Enron story serves as a cautionary tale about blind trust and the dangers of financial manipulation. 2. GameStop, the short squeeze heard around the world. In early 2021, the stock of GameStop, a struggling video game retailer, became the center of one of the most extraordinary trading events in history. The story began on Reddit's Wall Street Bets forum, where retail investors noticed that hedge funds had heavily shorted GameStop stock, betting that its price would fall. What followed was a coordinated effort by small investors to buy GameStop shares, driving up the price and forcing a short squeeze. Hedge funds that had shorted the stock, like Melvin Capital, suffered billions of dollars in losses as they were forced to buy back shares at skyrocketing prices. GameStop stock soared from around $20 to over $400 in a matter of days. This event wasn't just about making money. It was seen as a rebellion against Wall Street elites. It sparked debates about market fairness, the power of retail investors, and the role of platforms like Robinhood, which temporarily restricted trading on GameStop during the frenzy. The GameStop saga highlighted the unpredictability of markets and the power of collective action in the digital age. 3. Bernie Madoff, the largest Ponzi scheme in history. When people think of shocking investing scandals, Bernie Madoff's name inevitably comes to mind. For decades, Madoff was a highly respected figure on Wall Street. He served as chairman of the NASDAQ and managed a prestigious investment firm that promised steady, reliable returns. But in 2008, Madoff's empire came crashing down when it was revealed to be a massive Ponzi scheme, the largest in history. Madoff had been paying returns to older investors using money from new investors, rather than generating legitimate profits. The scheme unraveled during the 2008 financial crisis, when clients began withdrawing their money and Madoff couldn't meet the demands. The total losses were estimated at $65 billion, wiping out the life savings of thousands of individuals, charities, and institutions. Madoff was sentenced to 150 years in prison, where he died in 2021. His story serves as a stark reminder of the importance of due diligence and the dangers of too good to be true promises in investing. 4. The 2008 financial crisis, when the housing bubble burst. The global financial crisis of 2008 was one of the most devastating economic events in modern history, and its ripple effects are still felt today. At its core was the collapse of the U.S. housing market, fueled by reckless lending practices and the proliferation of mortgage-backed securities. Banks and financial institutions were issuing subprime mortgages to people who couldn't afford them, while packaging these risky loans into securities that were sold to investors as safe. When homeowners began defaulting on their loans, the entire system started to unravel. The shockwaves from the crisis wiped out $10 trillion in global market capitalization within months, and millions of people lost their homes, jobs, and savings. The crisis also exposed deep flaws in the financial system, while the crisis taught investors valuable lessons about risk and leverage. 5. Tesla's meteoric rise, from skepticism to dominance. Tesla's journey in the stock market has been nothing short of shocking. When Elon Musk's electric vehicle company went public in 2010, many investors were skeptical. The company was losing money, the electric vehicle market was niche, and legacy automakers were seen as insurmountable competitors. Tesla's IPO was priced at just $17 per share, and few could have predicted what would come next. Over the years, Tesla has defied expectations, consistently proving its doubters wrong. Despite periods of extreme volatility, the stock surged to unprecedented heights. In 2020 alone, Tesla's share price skyrocketed by over 700%, making it one of the most valuable companies in the world. By 2021, Tesla had reached a market capitalization of over $1 trillion, surpassing the combined value of many traditional automakers. The company's success was driven by its innovative technology, strong branding, and Musk's visionary leadership. However, Tesla stock also became a favorite among retail investors and speculators, leading to wild swings in its price. While some analysts warn that Tesla is overvalued, others believe it's just the beginning of its dominance in the EV market. The world of investing is full of surprises, some thrilling, others devastating. By studying these stories, we gain insights into the opportunities and risks that come with investing. If you enjoyed this video, don't forget to like, share, and subscribe to the channel for more fascinating stories and valuable investing insights.